Hi, today is Sunday, the 8th of November, and this has been a very eventful week. And let's face it, even though last week, that was on October 30th, I got it more or less right in terms of the markets, testing 30 to 80 very strongly. I thought it would go further down with election jitters, and to my surprise and probably everybody's surprise, it went up. In the last video, I said yes, it could maybe go up to 33, 50, 60, and with a little bit of bullish luck, it would go to 34, 37. But this last run at the end of the week to almost 35, 30 was really surprising. It has thrown out many trading plans, I am sure. So I'm going to be more cautious with whatever predictions. Let's say this is an outlook from what I can see today, and this is a 4-hour chart. I've started drawing fib retracements to see where the market could dip, and I would think that we have, as you can see, we have here a bullish resilience, and on Friday it was almost tested and it went up again. So I would say at this point the chances of retracement are pretty thin. We have a pivot on what was last week my strong resistance, 34.40. So in case the market is looking for directions, in case bears have more stamina to go into profit taking, I would say of all these lines, the major one to look at is a pivot here. So now if we now look at bullish potential or up potential, recent high on October 12th could maybe stall the market for a while. And I would say that all-time highs would be a good target for bulls. This is probably not a coincidence, but the 3600 is exactly through 3593, but I'd say 3600 is the strong resistance in the short term. This is a 4-hour outlook, and this is generally valid for a day or two. And again, I invite you to join the Slack groups to have more regular updates. If we now look at a longer time frame, one day, here this roller coaster has been really crazy, as you can see, and we have turned bullish. That's as simple as that. I mean, this market is going bullish, and yet at the same time, this strong resistance, which is higher in a 4-hour chart, this one has not moved yet. This doesn't mean it's not going to be moving. I mean, as you can see, we had already a penetration quite deep. So of course, this is a slower time frame, and as a matter of fact, it's probably better to speed up this indicator and put 1 instead of 2. It only looks at 64 bars, not 128 bars. So, and in a very hesitant market. So here we see that this is the same lines as in the 4-hour chart. So definitely this is the target for now. So market stalling between 3550 and 3600 is quite possible. I would say that options traders, at least when they try and enter trades or whatever order, they tend to be a little contrarian to get a better price. But in the overall outlook, it's better to go with the flow, and the momentum is bullish. So I would say that now that President-elect is known, unless we have the legal battle that is very much anticipated, causes nervousness in the market, I would say that we are on a bull run. And if we look at the VIX, after the elections, the VIX dropped very sharply. I mean, this may look like just a normal roller coaster thing, but we were at 40 on last week, 40, 41. We're down to strong support on 25. So here again, and I think here I'm using a 2. I could maybe go for 1. Doesn't change much. Okay. So for the VIX, strong support on 25 is likely to cause some stalling for VIX shorters or VXX shorters. So I would say that here as well, we should have a bump. We don't have a total synchronicity between SPX and VIX. And we've had a return to good anti-correlation, as you can see here. The SPX VIX, and this is calculated for, I'm just plotting for the last 2 to 3 years. But as you can see, this is now, I would say, a return to normal. We don't have the weird volatility behavior that we had 1 month or 2 months ago. So the roller coaster was pretty difficult for short bigger traders, but now I would say at least this is a more normal behavior. So going back to the SPX outlooks, the SPX outlook, and here it is the VIX, I would say that even though there's no synchronicity, no clear synchronicity in terms of levels, the correlation is okay. So if VIX bounces back, we should have them, and we'll go back to a 4-hour chart. I would say if the market doesn't find the momentum to go higher to 3550 or 3600, we would then have a bullish congestion turning a congestion. And at the moment, the support is on bullish resilience, around 3460, and the stronger one is on 3440. I've mentioned time and times again that we have overall, even though this may not be visible to the naked eye, I could say, but we have those 40 points gaps, and in short time frames it could go down to 20. So now to look at the 1-hour chart for Monday morning, and that could give us maybe a better image. Here we have this market stalling on 35.20, 35.30. Of course, news over the weekend, President-elect Joe Biden, we may have a strong reaction when futures reopen tonight. So we will see whether we have an up or down. I would assume that there should be some kind of relief sentiment in the market going up. That doesn't change the thing that it's probably just a bullish congestion. Of course, if 35.30 is broken, we'll go back to 35.50 and maybe run to 3600. That is quite possible. But at this time, even if VIX could dip below, it dips sometimes below 25, and a support can be broken, of course, and you can see that the hedging activity has dwindled quite a bit. So, of course, although this is not visible right now, we could have the market falling further, like it did in August. In August, it fell below, and the support, we have strong gaps, which are probably 3.6 points. So we could go down to the 22 area. That looks like quite a possible support level. So overall, I think the market will go into bullish mode. And of course, we can go back to this kind of mistake that, in my view, the anticipation of a legal battle would have caused more concern, and the market would not have gone this bullish. On the one hand, large institutions may have bet on a status quo in terms of balance of power between the House and the Senate, and also the chances of outright war against China will be reduced with now Biden in charge. Nobody knows what the incumbent, President Trump, can do in the next 2 months. We don't know about legal battle. We don't know whether it's going to throw a fit and go more aggressive on the world geopolitical front. So we don't know. There's a lot of uncertainty. But I would say large institutions will bet on the Republican Party dumping Trump, probably learning to coexist with the new administration. A lot of politics, and of course, politics do play a role in the markets. To sum it up, I would say, unless we have a surprise, there should be bullish congestion. We will see whether, in case the market then drops with 34.40 is tested, and we could have what we've had in the last 2 months, the same roller coaster with lows in the low 3200 and highs of 3500s. This is, for most traders, a difficult market because, of course, we are not used to roller coasters of this magnitude, but that's the market we have. Enjoy your Sunday and see you tomorrow on site. Bye for now.